What is going on? Welcome back to Learn About Bit. I want to start off this video by saying Merry Christmas, Happy Holidays, whatever holiday you're celebrating. I hope that you have a good time this year. Time is the most valuable asset we have. So whether you're spending it with family, friends, your dog, your cat, someone else, I hope that you have a good time this holiday season. I know I am. I personally love Christmas. I love this time of year. About a month ago, I made a video where I got into some election investments, and you can find that video on my YouTube channel. In that video, I went over my opinion that I think the Federal Reserve and the existing administration are going to be cutting rates this upcoming year and shifting to a looser monetary policy. Sure enough, we got news a couple weeks ago at the Fed meeting that they are going to start cutting rates next year, or at least they plan on cutting rates next year. And they are going to be shifting to this looser monetary policy. So they're basically going to be trying to make all the markets look pretty and beautiful leading up to the election so that more people vote with the existing administration. If investments are doing good, right? If people's 401ks and portfolios and their houses are going up in value, then they're more likely to vote with the sitting president. So I wanted to get into what this, now that we have this confirmed news, what it means for markets, what it means for the dollar, treasuries, Bitcoin, gold, equities, and real estate. And I also wanted to get into why, while they may want to cut rates next year, why they may not be able to cut rates as much as they plan, and also go over the quantitative easing that we are going to see next year and over the coming years and what this means for markets as well. Before I do get into the video, please hit that subscribe button. Also make sure to like the video. I really appreciate your support. Let's get into what this means for the dollar first. I think this is clearly just a bearish for the dollar. If we're cutting rates next year, that means that it's going to make borrowing dollars cheaper. People are going to use those dollars to invest in other things that are going to appreciate against the dollar. This pushes the value of the dollar down. Also, with quantitative easing, whether it be outright quantitative easing like we saw in 2020, where the government is just giving money away, or whether it be stealth QE on the back end, where they're giving it to certain parties or they're injecting money into certain areas with different programs. That means a higher supply of dollars in the economy, which means the value of the dollar will go down. So clearly just bearish for the dollar. And this means it's bullish for most things, right? Things that are priced in dollars are probably going to go up. Next, let's get into the treasuries market. Now, the treasuries market is the reason why I think the Federal Reserve might not be able to cut rates as much as they want over the next year and upcoming years. Let's take a look at a chart here which shows the federal surplus or deficit in the US. This is from 1900 to about 2023. As you can see on this chart, it's pretty linear, it's pretty straight. We didn't really have a high surplus or deficit until about 1980. Probably has something to do with when we went off the gold standard. And then when we got to 2008, when we had the GFC, we really start to see this deficit problem get out of control. And then with that massive stimulus issuance in 2020, we saw the deficit just hit a whole new low. And I think this deficit problem is only going to get worse. We're going to have to create more and more debt every year to pay off the existing debt. And basically, this is why the Federal Reserve may have to keep rates high, because we're going to run close to a $2 trillion deficit this year. What are we going to run next year? Are we going to run a $2.5-3 trillion deficit next year? When we issue these deficits, we have to issue a ton, or when we have these deficits, we have to issue a ton of debt. And if the Federal Reserve lowers rates, that basically means that it's cheaper for people to borrow money, to so people can take out a loan and invest in a house or a car, or take out a loan and invest in a company or the stock market. So basically, when rates go down, this pushes people out of the treasuries market and into other markets because it's cheaper to borrow money and invest in other things. Also, and yeah, so the people are leaving the treasuries market and going other places. But if they're having to issue more and more debt, well, they need people to stay in the treasuries market, right? They need people to keep buying treasuries. You also think about if the dollar continues to go up or continues to go down in value with the supply growing through quantitative easing, and we get to a point where we're probably already above a 10% inflation rate in reality, but let's say we if inflation's at around 15%, nobody's going to want to buy treasuries from the government that are yielding 4 to 5%. They're going to want to invest in something like Bitcoin or stocks or something else that is pacing with inflation or beating inflation, right? That's the goal of being an investor. You want to be outpacing the inflation rate so that you can buy more things. So in reality, the government they need inflation to not go up too much, because if it goes up too much, nobody's going to buy their debt. They're going to buy other things, and they need yields to stay high. They need yields to stay either pace with inflation or be above inflation, because that's the only way people are going to invest in the treasuries market. So I think they may have to keep rates high so that people don't invest in other things. Now let's take a look at the Fed balance sheet. So, like I said, I think we're going to see quantitative easing tick up next year to make the markets look pretty, no matter how much they lower rates. So we're going to see, you could see it on this chart, in 2020, the Fed balance sheet went up a lot because they bought a bunch of debt and they pushed money into the economy. Then in 2022, when we started this rate hiking cycle, this rapid rate hiking cycle, we can see the balance sheet went down because they're selling treasuries out into the market. So their balance sheet's going down, but they're taking money out of the market. So I think we can expect to see this chart pivot upwards, and we can start to see their balance sheet go back up as they take money, or they take treasuries out of the market and they push money into the market. And we can also take a look at one more chart here, which is the M2 money supply. As you can see, it's kind of similar to the Fed balance sheet. So in 2022, when we started doing quantitative tightening, taking money out of the economy, you can see that the M2 money supply goes down a bit, but we can expect this to tick back up over the next year and a lot over the next upcoming years. So I think that treasuries, this is bearish for treasuries long term, because the more these deficits grow, like, there just isn't going to be a market for these treasuries. People are not going to want to buy debt when they know more and more debt is coming onto the market and flooding the supply. And people are just going to stop playing this game with treasuries. And I think treasuries are kind of like a scam, because you're just investing in a treasury is basically just a claim on future dollars. But if the dollar is always going down, then you're not really, like, it's an investment that's not creating more value. You're just getting more dollars, but they're worth less in the future. So I think we're eventually going to get to this situation where the Federal Reserve just starts buying up all the newly issued treasuries, because nobody wants to buy them, so the government has to buy them. And when they do that, let's say in a couple of years we run a $4 trillion deficit, and the Federal Reserve has to buy half of that because there's no market for treasuries, then that's going to shoot $2 trillion out into the economy, and they're going to take those treasuries onto their balance sheet, and that's going to be super inflationary. And this is just only going to get worse for time. So this is kind of the road to hyperinflation. And that may take a while, but inflation is only going to get worse over time, in my opinion. Let's get into what this means for some other assets and markets. For Bitcoin, I mean, it's pretty much bullish for everything. It's a bullish catalyst. There's a lot of factors that go into different markets, so it doesn't necessarily mean that everything's going to shoot up, but this is a bullish catalyst for everything that's denominated in dollars besides government debt. So for Bitcoin, with the dollar going down, that means the price of Bitcoin is going to go up. You also look at all the other bullish catalysts we have going on for Bitcoin. We're seeing global adoption. We're seeing countries start to capitulate to Bitcoin. They've been resisting for a long time, but now they're starting to realize that maybe this isn't something we can stop. So they're starting to create a framework and a system for Bitcoin within their country. Here in the US, we have the ETFs that are coming over the next couple of weeks. That's going to increase demand. We have the halving coming up in April. Bitcoin will be the best performing asset of 2024 and the best performing asset over the next 5 years. I think right now is a great time to get into Bitcoin before we see a huge increase in demand and we also see the supply of Bitcoin coming into the market go down. So this is bullish for Bitcoin. For gold, this is bullish for gold. If the value of the dollar is going down, we're going to see the value of gold go up. And I am actually kind of bearish on gold long term because I think Bitcoin is going to steal a lot of gold's thunder. In the short term, I think we can expect to see people look to store value in gold. It's something that if you hold the physical gold, it doesn't have a lot of counterparty risk. And historically, it's been the store value asset. So I definitely think we'll see people run to gold with the dollar going down in value. But in the long term, I think people will start to shift to Bitcoin over gold because it is a better store of value and it is also a better has better functions of money than gold in other areas. So bullish on gold in the short term, bearish on gold in the long term. Equities, clearly this is good for equities. So if the dollar's going down, the stock market's going to go up. That's why when we got this news, we saw the stock market rip. The stock market's been doing pretty good over the past couple months in anticipation of this shift, this pivot to looser monetary policy. The one thing I will say about the stock market and the real estate market is that there's more risk with stocks and real estate because there are other factors in play. The great thing about gold and Bitcoin is that they don't have a lot of counterparty risk. So you can hold Bitcoin in cold storage or you can hold gold in a vault and a bank can fail or unemployment can go up a lot and your gold or Bitcoin's still going to hold its value. But let's say, with equities, if you invest in a company and they save in dollars and or they're not good at investing their savings and the dollar's going down, then they could potentially be hurt by this looser this dollar devaluation, or maybe they keep their money at a shoddy bank and the bank goes under and then they're just shit out of luck and they fail, or maybe they aren't smart with the way they borrow money. So there's more risk with equities. I also think there's areas of the stock market where certain stocks are or certain sectors are overvalued and other sectors are undervalued. So just something to keep in mind. There's a lot of factors that go into markets, and although this is bullish, it won't necessarily mean that everything's just going to go up over the next year. Real estate, I think this is pretty bullish for real estate when you think about this high interest rate environment. It was making it very hard for people to take out loans to buy a house, right? Nobody wants to take out a loan and make 8% interest payments. They would rather wait till rates go back down so that they can take out a loan where they're paying less. So I think with rates going down, we are going to see more people look to buy houses, which is bullish. Also, you think about people who are maybe struggling to pay off their loans for their house. Well, with rates going down, they can refinance and get a better loan, hopefully, and that's going to take some pressure off the real estate market. Also, if we see an increase in the supply of dollars, that means that that's going to push up the value of real estate as a whole. But like I said, with the same with the stock market, there's probably certain places in the US where real estate is a bit overvalued and other places where it's undervalued. So you won't necessarily see all real estate go up the same. So it's important to make sure that when you're investing in real estate that you're investing in the right place where you see a lot of potential upside, not a market that is super overvalued. I was actually talking with my friend just last night, and we were just talking about how expensive real estate is in California, and maybe real estate in California is a bit undervalued. We're seeing people shift to working through the internet, so you don't necessarily have to be near a city like Los Angeles or the Bay Area. Maybe that, and we've also seen a lot of pollution and other issues with homelessness in California. So maybe real estate in California is a bit overvalued. That's for you to determine. So overall, I would say this is just bullish for all assets besides the dollar and US Treasuries. One thing I do want to mention before we conclude this video is that there are some risks in the short term. We did just go through a super fast rate hiking cycle. Could we see more banks fail? And that could lead to a sell off in markets, especially, who did those if we see banks fail, and they lent out money to a bunch of businesses, well, that could affect, the stock market in those businesses or other areas. So there are some risks out there in the short term. You also think all these banks have been really utilizing that bank funding program from the government that was set up after the failures of Silicon Valley Bank and First Republic Bank. So that's one thing to keep in mind. The banks are kind of like the nodes of the whole system. So if we see banks go down, then we could see a lot of other issues. Another thing that I could see leading to a sell off in certain markets is if we get unemployment continues to rise. I think if we shift to a looser monetary policy, then it would make sense that we'd see unemployment go back down. But if unemployment continues to rise and people are out of a job, maybe they can't make their home payments, and we see some people default on their home loans or other loans. Maybe if we see unemployment go up, people have less money to invest in other things like the stock market or gold, Bitcoin, whatever. So that's another thing to keep in mind. If people are unemployed, then they have less money to invest in the markets, and that could reprice the markets lower. But altogether, bullish news if we're going to see rates come down. Like I said, don't know how much we'll see them come down. I've listened to people like Peter Schiff and Max Kaiser say that they think rates are going to stay high. And I definitely think that's a possibility because we need to keep those yields high, those treasury yields. But bullish for everything. If we do see a Fed pivot, I think right now is a great time to get some exposure to Bitcoin with all these bullish catalysts coming around the same time. So if you're interested in getting exposure to Bitcoin, you can do that through my Swan Bitcoin link in the description. If you use it today, you can get $10 off your first Bitcoin purchase. Not a bad deal. They also have a lot of articles that are great for learning about Bitcoin. So check out Swan. Again, thank you for watching my video today. Make sure to subscribe and like the video, and I'll be back soon.